Jai Hind friends. If you are new to this channel, please hit the subscribe button so that you can get regular update whenever a new video is uploaded. And in case you like the video, please do hit the like button. It will help the video reach more and more audience and more people can benefit from the video. In this video, we are going to talk about Tata Elxsi share. We are going to discuss about its chart pattern. We are going to talk about its business. We will discuss its financial. We will also review the shareholding pattern. And in the end, we will also discuss the resistance and the support level for this company. So let's start. Now we are at the chart for Tata Elxsi, and today this company closed at around 6250 with an upside of 1%. If I look at 1 year return, company has provided negative return of 4.65%. But if I change it to 5 years, then the story also changes completely. In 5 years time, it has provided 523% return. And this is the reason why I keep stressing on this point, that minimum time that you need to give to a company for it to give you good returns is 5 years. Because in short term, company may go through a lot of ups and downs, but if you give them time, then if it is a good company, the business and the management is good, it is most of the time will going to provide you very good returns. And currently, if I look at the fall, the share is almost around 40% down. And the reason for downfall is not that something has gone wrong with the company, which you will also see in the results that we are going to discuss. The two reasons why this company is down is, first is because the entire market is down. Mostly all these sectors are down: IT sector, banking sector, NBFC sector, chemical sector. You will see most of the important sectors are down, although there are certain exceptions like PSU banks, etc. But majority of the sectors, if you'll see, they are down, and majority of the companies are also down by around 20 to 40%. So one reason is the overall market. Second reason is because when it was going up during this phase, it was a momentum stock. So what happens in a momentum stock? There are a lot of investors who invest only in momentum stocks. Momentum stocks are those stocks which keeps on going up, but whenever they lose the momentum, for example, in this case around this point, and then you see a downfall started from that point. So whenever the share loses its momentum, that is when those momentum investors get out of the company. And then obviously we will see certain downfall. But again, the same thing, if you keep your horizon to 5 years, all these short-term things about momentum investing, inflation, crude oil prices, this, that, everything gets absorbed, and company eventually gives you good return. Let's also look at its long-term chart pattern. So long-term chart pattern, you can see again it fits our investing criteria, which is a chart pattern going from bottom left to top right. You can see here. So what this also means is that now we can go ahead and look at other things. If this would have been in an opposite direction, we would have just cancelled this stock and would have researched on any other stock. That's how I also save time, and I'm able to filter out the bad companies. Now coming on to the falls. So currently we have seen that the share is down close to 40%. So now let's see if this is the regular trend of this company, or this is something new, exceptional, or first time that this company is down by 40%. So here you'll see that the company was down around 45%. And this was during COVID, so it's okay. Let's move a little ahead, and you'll see that around this time from 2015 till 2017 also, the company was down around 38%. We can say close to roughly around 40% it was down. So 40% downfall this company has shown earlier as well. So we cannot say that this is something new and something wrong has happened with the company which has never happened before. And we can also see what has happened after that. So now let's see what is the business of the company. So one important thing is that this is not a IT service company like TCS or Infosys. This is a company which provides design and technology services across industries including automotive, media, communication, and healthcare. So we can say that this is a design and technology service provider company, or we can say this is a company which provide product IT related services. And you can see here the geographical presence of the company. The company is present across the world. And with Europe, it gets majority of the revenue, which is around 36.5%. From Americas, it gets around 36%. From India, 13%, and the remaining from the rest of the world. And here you can see that from the embedded product and design category, it gets 88% of its revenue. And under this, they provide technology consulting, new product design, development, and testing services for various sectors like automotive, consumer electrics, telecom, transportation industries. And you can see that it also works with the leading OEM and suppliers in automotive and transportation industries for R&D, design, and product engineering. So basically what we can think is that this is a new segment, which is a product IT segment, which is also growing at a very good rate. And if we look at the revenue by industry, then from the broadcast and communication industry, the majority of the revenue comes, which is around 44%. Then the remaining 41% comes from transportation industry. From healthcare and medical devices, they get 10%, and the remaining 4% from other industries. And if we look at their client concentration, then the top 5 customers of the company contributes 39% to the overall revenue, which reflects moderate client concentration. So why is this point important? This point is important because if a company is only dependent on one or two clients, then it is a risk, because if that one or two clients takes away the business from them, then they will get a very negative impact on their business. So it is very important to spread the client concentration so that you are not dependent on one or two clients only. So for Tata Elxsi, they are saying that their top 5 customer contributes 39%, which I still believe is on a higher side. They may have to work on this piece a little bit to reduce the dependency on the top 5 customers also. Here you can see the market cap of the company. The market cap is 38,800 crores. The face value of the company is 10 rupees. So people who are interested in split and bonus, this company in future can give you split and bonus also, because the face value is still 10 rupees. But your decision for investing in any company should never be split or bonus. It should always be the business and the good management. And we can see the number of pledged shares are also 0. So one more good point. Now we are at the pros of the company, and you can see that company has delivered good profit growth of 25% CAGR over last 5 years. And this is the very important piece for any company. Unless a company's profit is growing at a healthy rate, expecting that company to provide you good return is very difficult. So profit growth is supreme, and company also has a good return on equity with a track record of 31% return on equity over the period of 3 years. And company has been maintaining a healthy dividend payout of 56.5% also. And in the cons, you can see stock is trading at 23.1 times of its book value. This you can ignore because mostly you will see good companies trading at a multiple of their book value. So here you can see that this company is currently down by around 42%. Although there are other companies also in this list, but Tata Elxsi work is slightly different. If there is any other company which is into the same kind of work that Tata Elxsi is, it is LTTS. So we can say both companies are almost into the same kind of work segment. And now we are at the quarterly numbers for the company, and you can see for December 2022, year-on-year sales increased by 28%, which to me I don't think is a bad thing at all. 28% increase in the year-on-year sales is also a very good increase. And if I'll scroll a little back, you can see that the company was growing around 30 to 35%, and now from 30 to 35 it has come down to 28%, which is not a very steep decline in the sales figures. If you look at December 2021 numbers, sales was 635 and operating profit was 211, which increased to 247 in this quarter. The OPM percentage of the company is also very healthy. You can see it was around 33%, which is now close to 30% now. And now we are at the yearly numbers, and if you'll see that from March 2011, the profit is continuously increasing. In 2011 it was 47 crores, then 68, then 70, then it increased to 137, then 177, then 248, then 274, then 347, then to 406. Then there was a dip during the COVID time, it dipped to 344, and then again there was a massive increase to 524, then 767, and now it is around 933. So clearly we can see that the business is growing, the sales are growing, and hence you can see the profit also is growing at a very rapid rate, which in a way also means that there is a huge demand of this kind of business segment in the overall global economy. And here you can see the profit growth of this company. 10-year profit growth has been 32%, 5-year 26%, 3-year 24%, and in the last 12 trailing month the profit growth has been 41%. Sales growth also is very good. 10-year 17, 5-year 15, 3-year 16. In the 12 trailing month it has only performed better, which is 30%. Return on equity is also excellent, above 30%, and the stock price CAGR is also very good. 10-year 51%, 5-year 44, 3-year 85, and in the last 1 year it is down by around -6%. But if this company keep on increasing its sales and profit even at this percentage, even at a rate of 30%, then we can expect that this company can easily give a CAGR return of 25 to 30% also in the coming future. Right now it is just a temporary dip. Just hold this company for 5 years. If this keeps on performing the way it has been performing right now, you can be rest assured that your money will compound eventually. And one more thing with this company is that this belongs to the Tata group, a well-renowned group, a well-experienced group. And this segment, which is the product IT segment, is fairly a new segment, and the market cap also is not very big right now. It is just 33,000 crores. In case if this segment also can get the same kind of growth that the IT services segment got, then we may expect that this company can also become the TCS of the product IT segment. But for that we'll have to keep monitoring its quarterly results, its yearly result, and if the company is performing, then you just have to stick with the company. Now we are at the shareholding pattern of this company, and promoter holds around 43.92% of the stake, and promoter is nobody but the Tata Sons Private Limited. Then FI holds around 13.89%, DIs hold around 3.43%, and the remaining is with public, which is around 38.75%. Although you can see that the FIs have trimmed their stake a little bit from 15.37, they have now come down to 13.89, but that is completely fine. It does not mean that we have to sell the company and run away. FIs also keep selling and buying companies. 13.9% stake is also not a bad stake. If there is something wrong with the company, then you will not even find this much percentage stake of FIs in the company. So to me, nothing wrong in the shareholding pattern. Shareholding pattern also looks decent. Now we are at the chart for Tata Elxsi, and you can see that this company made a high close to around 10,700 rupees, and from there it has fallen down and it has come down to around 6250 level. It went down till 5750 levels, you can say, but from there you can see it quickly went up and started taking support close to 6250 levels. And if you'll also look at the RSI indicator, in the RSI indicator also you'll see that the stock is currently below the 40 number, which means that the stock is currently in the oversold area. And at this area, if somebody is interested, they can think of investing in this company, because right now the risk and reward ratio is also very favorable. The risk in this company or the downside in this company is very limited, because we have seen previously also the company falls maximum to around 40 to 45%, or we can say let's take a worst case scenario, which will be 50%. Currently the stock has already fallen by 42%, so the downside from here is very limited, but the upside in the long term is very high if the company keeps on producing good results and if the company keeps on increasing its profit CAGR at a rate of 28 to 30%. So if somebody is looking for a long-term investment in a good company which can do well in future, you can think about Tata Elxsi at this point. In the same segment, LTTS is also a good company, but right now it has recovered a little bit, and compared to LTTS, Tata Elxsi is still available at a very good and a massive discount. So one disclaimer before closing the video: these were all my views. Please do your own study and research also, which is very important before you take any buying or selling decision. And in case you invest after doing your own research and study, please try to keep your horizon to long term, minimum 5 years, because good returns you will only and only get in long term investing. In short term, getting return by frequently buying and selling a company is very difficult. You may be able to earn good profit on one day, but on the next day or the next time you will lose that money. I am telling that with my own experience, and I am telling that with the experience of a lot of other investors who have been in the stock market from a very long period of time. So try to learn from the mistakes of others and keep growing. So I hope this video was helpful. Stay invested. Thank you.